This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. Let's start here by looking at the S&P 500 after the CPI reading that we had on Tuesday, and of course after the FOMC meeting that we had during yesterday's trading session, where we got a 0.5 basis point hike by the Fed, followed by Jerome Powell's Fed conference. Markets did move down on the day, but it was a very mild session actually. We only ended down 0.37%. And I actually see that as a pretty big victory for the bulls here. You know, the fact that we didn't have an intensive sell-off during yesterday's trading session is actually very positive for this market. During today's trading session, of course, we've still got about 2.5 hours until the US market's open, but we are down 1% in the future market. So current trading at 3,958. I do expect this 0.38 fib area to kind of give some sort of support here. But I feel like we're currently in a range which is pretty much between 4,100 all the way down to around 3,850. 3,900. Sorry. So we're in this 200 point range where I feel like we could probably trade in now up until year end. You know, I'm going to just draw a nice little green box here, and you know, if we break towards the downside and of course below that 50-day EMA, that will then send us down towards that 0.236 fib area, which currently sits at around 3,800. And then if we break above the top side, which is 4,100, then I think it opens up the door to a move up towards 4,290. So this is the current range that we currently find ourselves trading in. I feel like it is buyable when you are this low. It is sellable when you are at the range high. Of course, now from a seasonal perspective, it's very bullish. We have the Santa Claus rally that could potentially come into effect any day or week now, up until year end. But I still believe that as we go into January is going to be a very tricky month, and I probably favour a move down below this range more than I do a move up, and that's just due to the fact we have earnings coming out soon, and you know, the earnings picture is going to be very bleak, and the guidance going forward is probably going to be very negative, and that's going to bring the earnings figures down, and you know, the discounted cash flow is going to be affected by that as a result. So definitely favour the downside here for the S&P 500, but I do 100% realise that we could easily have a rally back up towards the swing highs and to the top of this range, which is up around 4,100. So definitely be careful for that.